Hello everyone and welcome to our webinar this morning. And today we're going to be talking about what's happening in QuickBooks with eCCDesktop. And today is May 15th. So a bit of housekeeping before we get started. Today's webinar is going to last for about an hour. Everyone who's attending, you guys are dialed in and muted at this time. If you have any questions, you can submit those questions in the GoToMeeting questions area. Within your GoToMeeting dashboard, if you expand your orange arrow, you'll see a questions area. You can put in all your questions there. Throughout this presentation, we'll also have two polling questions. And at the end of the presentation, we'll have a question and answer forum, and we'll address your questions there. If we don't get to any questions during the question and answer forum, we will gladly contact you offline and address your questions. And just so you know, this webinar will be recorded, and when the recording has been created, you'll be emailed with the recording so you can watch it at your leisure. So today's presenters today are myself, Allegra Mitchell. I'm the Customer Success Manager here at Webgility. And we also have a very special guest, our resident QuickBooks Pro Advisor, Chris Robinson. He is a gold certified QuickBooks Pro Advisor, and he also works at Business Solutions Provider, and he specializes in QuickBooks Advanced Inventory for Enterprise, and also third-party inventory products such as SOS Inventory and etc.
Thank you, Allegra.
So a little bit about who we are. So if this is your first webinar that you've attended with us, welcome. If you've attended any webinars in the past that we've done, welcome back. We at Webgility, we are headquartered in sunny San Francisco, and we have our development and support centers in Indore, India. We also have support here, US-based, in San Francisco as well. Our product serves thousands of small to medium-sized business customers worldwide, and we've been certified by Intuit since 2007. And we're also partnered with top e-commerce platforms, shipping providers, and hosted QuickBooks providers. And we also have hundreds of web developers, designers, and QuickBooks Pro Advisors all promoting our products. And our products are eCCDesktop, ECC Cloud, and ShipLark. This webinar will primarily focus on eCCDesktop and its interaction with QuickBooks. So our agenda today. Chris is going to take you through some particulars about inventory management using eCCDesktop and QuickBooks. He's going to take you through the various inventory items, item types within QuickBooks. And then he's also going to talk about what is eCCDesktop doing in QuickBooks. And also his favorite reports and how to use reporting in QuickBooks to give you insight as to how your business is doing. And then we'll launch right into the Q&A forum. So our first polling question we're going to have you take is, what do you need help with in QuickBooks? QuickBooks is one of those type of programs that has a wealth of information, a wealth of things you can do, but sometimes you may not know how to use the particular features. So our poll is open. Go ahead and take the poll, and I'll give you a little bit of time. All right, we're going to go ahead and close the poll now. All right. So a lot of you, I see that a lot of you need help for understanding how eCCDesktop impacts QuickBooks. This is really good. Also setting up inventory, also very good. So I really do think that you are in the right place for this webinar, and this webinar is going to really, really help you. All right, so now we're going to launch right into Chris's demo. I'm going to switch him, and he is going to become the presenter, and I will let him take it from there.
Okay, hello everybody. I'm just going to dive right in. eCCDesktop is like a pair of glasses that you can see both QuickBooks and your shopping cart with. It doesn't know how two items relate unless they have an exact same name. Mapping is how you tell eCCDesktop that two items with different names are actually the same. Imagine that you have a product in QuickBooks called apples. That same product is represented in your shopping cart by a SKU number. How will eCCDesktop know which SKU number represents apples? Mapping creates a link between two products with different names. eCCDesktop now knows that apples equals SKU 8214. Let's say that you decide to change your product name in QuickBooks to red apples. Mappings can be broken if you change the name of an item in either QuickBooks or the shopping cart. You must then remap the item. This is why matching is preferable to mapping. When the item name is the same in QuickBooks and your shopping cart, there is a one-to-one, apples-to-apples relationship. How do you name items in QuickBooks? How do you name items in your shopping cart? By the vendor's description or by whatever the person creating the item decides to do on that day. It is faster to come up with a standardized naming scheme and stick to it than continually adjusting item names and remapping. This can be done by SKU or by using eCCDesktop to transfer items. Items should be created in one place, either in QuickBooks or your shopping cart, but not both. This not only reduces manual data entry, but avoids the confusion of having to map items with different names. I recommend the shopping cart as a place you create items because it is customer-facing, so you tend to have a more detailed and well-thought-out description anyway. Once you have these items in one location, eCCDesktop can transfer them into the other for you. Let's see how that works within ECC. So if we go here to the Products section and go to Transfer Products, you can either transfer products to QuickBooks or to the online store. The blue highlighted column here is the matching criteria, the name that will be transferred. Let's pick this sample product, Office 4M. You can see on the left here is where the description information, price, quantity, and cost all live. Now all these fields are editable. Let's change the price to $250 and the cost to $12. Over here on the right shows the different accounts that will be hit in QuickBooks by this item. It also shows what item type will be transferred over. Notice that you cannot select an assembly type item. That is because assemblies have a bill of materials associated with them. You must transfer the assemblies over as inventory parts, then go into QuickBooks and change it to an assembly and add the bill of materials. Let's see how that works. So I'll select this as an inventory part, save, great, and then transfer it into QuickBooks. Okay, so that was Office 4M was the name of it. So we'll go into my item list, look for that Office item, and here it is, Office 4M. So you can see it's an inventory part. We can inventory assembly. It's not reversible. Once you turn it into assembly, you can't turn it back into a part. And here our bill of materials area pop up. You just populate the bill of materials with the different parts that are combined to make this assembly. We'll say we have the audio, this item number 143, and maybe Word. So these are now the different parts get rolled up to create this total assembly item. The cost of the parts is actually more than I originally had the sales price, so I'm going to adjust it, and we'll turn that into a inventory assembly. So we can now see that this Office 4M is an inventory assembly. So I want to talk a little bit about the master inventory location. This is the one place where quantity lives. I'm not talking about a physical place. I'm talking about whatever program is in charge of your inventory. This is usually the program you use when receiving inventory. It is easier to have one location that accurately keeps track of your inventory than to be constantly trying to upkeep inventory in multiple places. Let's go over some basics of inventory. Inventory is increased when you receive items. Inventory is decreased by sales. Building assemblies increases the quantity of items that are part of materials and increases the quantity of finished goods that have been created. Inventory adjustments can increase or decrease quantity, but these should only be used in specific scenarios. Once you have picked the master location, how do you sync your quantity to other locations? eCCDesktop can push information from one program to another. Let's see how that works. So if we go back to the products part, you see we have a synchronized products section. You can pick a product you'd like to synchronize. Let's say that this PC Word product here, I know they're actually the 18 quantity in the store is correct and this 56 quantity in QuickBooks is wrong. So I'll just select Update the QuickBooks product, select to Update Quantity, and all I have to do is hit Synchronize. Great, it was a success. Now let's see how that PC word was impacted in QuickBooks. So we'll go back here into the item list, search for PC. Here it is right here, PC word. Now if we do a quick reports show every transaction that this particular item has been involved with, and we can see that an inventory adjustment transaction was created in QuickBooks by eCCDesktop to correct that quantity. The next thing I wanted to talk about is item types in QuickBooks. Now sometimes people get a little bit confused with the difference between assemblies and groups. An assembly is made up of inventory parts that are in the assembly's bill of materials. When assembly is built in QuickBooks, the quantity of those parts is decreased and the quantity of the finished good is increased. Let me show you how that works in QuickBooks. You go to Inventory, Build Assemblies, and let's build one of those bikes. So you can see here we don't have any bikes on hand, but here are the parts in the bill of materials that make up a bike. Over here is the quantity of each one of those parts. Let's say we decide to make 3 bikes. So we put 3 in the quantity to build and do build and new. Let's go back and see how that was impacted. Okay, we can see now those 3 bikes are on hand and the quantity of each individual part decreased accordingly. Groups, on the other hand, are items that are commonly sold together. They live in inventory individually until the group shows up on an invoice or sales receipt. Then they are picked and shipped out as a group. A gift basket is a good example of this. The main difference between an assembly and a group is that an assembly is created from the items that are in the bill of materials, while a group are items that are sold together. Sometimes people also tend to get a little bit confused about the difference between inventory and non-inventory parts. Inventory parts are typically all items that you stock and sell. The cost of an inventory part is held in your inventory asset account and then moved to your cost of goods sold account as items are sold. A non-inventory part are items that do not have their quantity tracked and do not hit your inventory asset account. They are expensed at the time of purchase. Office supplies and packaging are usually expensed. String, nails, and bolts are things that may be immaterial to your business and don't need to be tracked. Software downloads have no cost or quantity to track anyway. These are all things that are typically non-inventory items. If an item's costs are material and are sold to customers and set to be non-inventory, it could throw off your profits by recording costs in a different period than when the item is actually sold. If you sell chain by both the roll and the foot, but receive it by the case, units of measure could come in handy. Let me show you a little bit about unit of measure in QuickBooks. So if you go to Edit, Preferences, over here in the Items and Inventory section, to Company Preferences, you can see the units of measure area. I've selected to have multiple units of measure per item. So if we look up my chain item, right here, we can see that the base unit is by the foot. The base unit is the smallest amount that you stock, sell, or purchase the item by. This item also comes in a roll of 100 feet or a case of 10 rolls, which is 100 for the 100 roll and 1,000 feet in the case of 10 rolls. Now, if I look at the quick report for this item, I can see that I purchased on a bill 3 cases. So 3 cases have come in. Instead of just 3 being in your on-hand quantity, you can see that my base unit feet came in. So I have 3,000 feet in stock. If I wanted to sell some rolls to a customer, let's say we're going to sell to this customer, AJ, and let's say he wants to buy 3 rolls. So we put 3 in the quantity, and look, I can select foot, case, or roll. We'll give him rolls. So we can now see that the quantity got reduced by 300 feet. So sometimes it's much easier to list what you're actually receiving or selling by than having to do the conversions, especially if you have tons of items and weird differences like a foot, a case, a roll. Let's jump back into the presentation. Of chain sold by the foot, sometimes you sell 1 foot 2 inches to the customer because when you cut it, you don't want to short the customer, so you kind of give it a heavy eye. Over time, this will throw off your inventory count. A periodic inventory adjustment will need to be made for this. This also happens with items full or easily damaged. Items like these need to have periodic counts and inventory adjustments done on a weekly or monthly basis. I'll demonstrate how you do inventory adjustments in QuickBooks. Just go to Inventory, Adjust Quantity on Hand. You want to pick the date that you actually counted the item. I'm going to do today's date and the account that it's going to hit. One thing I want to note is it's important that you don't have it hitting your inventory asset account here because you're already going to that account and you don't want to circle back on yourself. So really there should be like a shrinkage account. Well, it's important that you take it and put it into a cost of goods sold or expense account. I really should have an inventory shrinkage account. I don't see one, so I'll put it into Ask My Accountant for now. So I'll have that item chain. And I can see that QuickBooks thinks I have 2,700 feet on hand. Let's say at the inventory count, I know that there's actually 3,500 feet on hand. So I'll just enter that here into the new quantity and do a save and new. And when we go back to the item, I can see now my quantity is 3,500 feet. So eCCDesktop fully integrates with QuickBooks, and it pushes orders in as transactions. There's no need to export to Excel, manipulate data, then import it back into QuickBooks. There's no need to decipher journal entries. Let's see how an order actually gets pushed into QuickBooks. We'll go here to my dashboard and my inbox with orders that are waiting to be posted. I will grab this order here for badminton and we will post to QuickBooks. So it was successfully posted. Now when we view it in QuickBooks, we can see that an invoice was actually posted in QuickBooks for this badminton Nokia that was sold. All the customer information is here. Now why did it post as an invoice? Well, it posted as an invoice because I requested it to do so. So if we look in my configuration settings under transactions, you can see you can choose to have it post as an invoice, sales receipt, sales order, or estimate. Now, which one of those is best? You want to use a sales receipt when a customer pays upfront for an item. Do your customers pay in your shopping cart at checkout? This is the best option for these types of shopping carts. Payment is applied at the time of sale, just like when you buy something at a supermarket and get a receipt. An invoice is a request for payment. Invoices are best for businesses that collect payments after items have been shipped. Invoices require that a payment be applied when received. An invoice to you is a bill to your customer. Remember, invoices increase your accounts receivable. A sales order is a non-posting transaction. It is not connected to any accounts in QuickBooks. It is an internal document that represents a purchase request from a customer. This is best for businesses that do custom work or sell items that are not yet in stock. An estimate is similar to a sales order, but the customer has not yet accepted your product or service. When it comes to your chart of accounts, less is more. You only need a handful of cost of goods sold and income accounts. At most, sometimes revenue, cost of goods sold, and inventory assets will work just as one individual catch-all term for each. So you don't even really need to have multiple cost of goods sold accounts. Sometimes just one cost of goods sold is all you may need. Let's see how the chart of accounts is structured in this company file. So I'm looking at the chart of accounts, and I can see here that there is a ton of income accounts. It looks like they've broken down their sales income by each individual product here. And it looks like they've done the same thing with their cost of goods sold. There's a different SKU number for each cost of goods sold account. Now this is something you don't want to do. I know that a lot of people may choose to do this because they're trying to get their total revenue by item, but this information is better found by running reports. You see what happens if you go in and look at your profit and loss statement. You can see that all the different accounts show up here. Now this is bad enough, but imagine if you had thousands of items and you're trying to create an account for each item. Your profit and loss statement would just get all clogged up and be very hard to read. Something else I noticed wrong with this chart of accounts is down here you see there's a sub-account with only one parent account. There's a couple things wrong with doing this. Let me go into the profit and loss to kind of show you a couple things. So when you look at this, you can see that instead of just having the one sub-account, there's two. Now this merchant and account fees other account, this is what happens when someone posts in the parent account. When you have a parent account with just one sub-account, it tends to cause people to make the mistake of posting to the parent account. Also, why would you have just one sub-account anyway? Why wouldn't you just have your account named Amazon Seller Fees rather than this general merchant account fees? Or vice versa, just have merchant account fees. Then all of these fees will just be in one spot rather than broken out. You can see a similar thing happen to the cost of goods sold account where someone must have had a charge that they couldn't think fit with any one of these items, so they put it into the parent account. That's why I tend to prefer just having the general account, cost of goods sold, or merchant account fees personally. So the next thing I would like to go over with you guys are some of my favorite inventory reports. Now QuickBooks is very powerful. There's a ton of different reports that you can run. I'm just going to go over a couple of the ones I like the most. So the first one is going to be the sales by item summary. Go to reports, sales, sales by item summary. So this report here shows you your total sales by item in the amount column. You can drill down on any one of these lines to see every sales transaction that that particular item has been involved with. It also shows you your average cost of goods sold and your gross margin. Another report that is very nice is your item profitability report. It's kind of hidden in your job time and mileage. If you go to your item profitability report, you can see your cost, revenue, and the difference for each item. The difference is basically your profit per item. You can also drill down in this report to see what sales transaction each item was on. Another great report is your stock status by item report. Now what this report does is it helps you figure out what you need to reorder by showing what you have on hand, what is committed to sales orders, what's committed to assemblies, shows you what is actually available in stock. Now if you set up reorder points, if what's available in stock falls below your reorder point, you'll get a check mark here in your order column. If you haven't set up reorder points, if your inventory goes to 0 or less, you'll also get a check mark here in your order column. And this is a really easy way to quickly see what items need to be reordered from your vendor. The last report I want to show you guys is your inventory evaluation summary. Oh, and again, you go to reports, inventory evaluation summary. So this report shows your quantity on hand of each item, the average cost for that item, and your total asset value for all the items you have in stock. Now, the total of all the asset values is way at the bottom of this list. And this is your total value of all your inventory you have in stock. Now this is an important number. This number should match your inventory asset account on your balance sheet. If it doesn't match, it means that your inventory is either overvalued or undervalued. So let's see how this account stacks up. So I'm going to go to my company and financial and pull up my balance sheet. Let's resize this window. And I can see that my inventory asset account and my total value of my inventory don't match. This not matching up is most likely a symptom of some very serious problems with the way your company file is managed, specifically how your inventory is being mismanaged. Now, there's many different reasons why this could happen, and this is a huge subject that I'll have to cover in a future webinar. Okay guys, that is all the information I had for you today. I'm going to turn it over to Allegra. I believe we're going to do another polling question, and then we'll have a little bit of a Q&A session for any questions that may have come up.
Thank you very much, Chris, for that presentation. Really making sure our clients are well informed about how to utilize QuickBooks effectively with our products is extremely, extremely important. So thank you very much for that. Before we go into our polling question, we're going to have a little Q&A forum. So during the course of Chris's presentation, I know a lot of you had some questions. So right now, Chris is going to be taking your questions and addressing those directly. So if you have any questions, now is the time to submit all your questions, and he will take them as they come in.
Okay, I got a great question from Andy. He asks, can you explain again how inventory item versus a non-inventory item may affect profit? So this kind of gets down to the difference between cash-based and accrual-based accounting. With accrual-based accounting, you want to record the cost of an item at the same time that it's sold. So say you buy $1,000 worth of inventory in 2013. With a non-inventory item, you'd expense them and record those costs right away. So it could look like maybe your business lost $1,000 because you expensed it then in 2013. So you're operating at a net loss for 2013. Then in 2014, you sell all those items. Then you'd have a profit in 2014 of $1,000. Now this isn't really accurate. So with accrual-based accounting, you record the cost at the time of sale. So that $1,000 goes into your inventory asset account if it is an inventory item, and then say they cost $10 a piece. Every time you sell one of those items at that time, it will then reduce your inventory asset account by $10 and increase your cost of goods sold by $10. So then that $10 cost is recorded at the correct time. I hope that answered your question fully, Andy. Sure. To merge a chart of accounts, this is from Mary. How do you merge a chart of accounts to fix the problems you're identifying with the sub-accounts? What you want to do is go, okay, I need to get my screen set up so I can show you guys. Okay guys, so what you want to do to merge your two accounts that may really just need to be one is you go to your chart of accounts, and remember I wanted to merge these two. So you pick the account that you want to merge into the other account, and you simply just change it. You simply just change its name. So I'm going to go here, right-click, edit the account. Right now it's Amazon seller fees, and I wanted, oops, sorry, I forgot what the name was supposed to be. I want it to be merchant account fees. So I'll change it to merchant account fees. And save and close. So you basically have to make them exactly the same. And then And I'll make that account active. And now we just have the one merchant account fees account. Next question, please. Letting inventory go negative mainly impacts, well, it has a lot of impacts, but one of the main problems that I see with having inventory go negative is it affects how your costs are recorded. Obviously, when you have a negative inventory on hand, your average cost is going to get thrown way out of whack because it's something that can't happen in the physical world. So QuickBooks tries to make these negative costs in there, and when they're recorded in your inventory, your total inventory value, it, instead of being a zero cost, it misrepresents it by showing it less than what it really is. So not only are you having the wrong quantity, but the total cost of your overall inventory is to be presented. Okay, from Dave, we want our vendor to electronically send us his invoice. Is this possible? There's a couple different ways that you can import transactions into QuickBooks. This is kind of a question to be better taken offline. There's some third-party programs that you can use to do this. We will definitely get back to you on that, Dave. From Neil, how do you cope with inventory in different locations? How do you differentiate that in ECC? That is a great question. So in QuickBooks Enterprise, there's an add-on module called Advanced Inventory. If we go up here to Edit, let me show you guys that again. If you go up here to Edit, Preferences, and Inventory, you can see this Advanced Inventory Settings button. If you buy the Advanced Inventory module, one of the main features in it is to allow multiple inventory sites. So if I choose to turn that on, I'm going to have to add some inventory sites for there to be, we'll call it an SF warehouse. And let's also add an LA warehouse. In addition to having multiple inventory sites, you could also have specific bin locations within each site, which is nice if you have shelves in each different warehouse that an item lives in a specific shelf. Rather than setting up all these bin locations, I'm just going to stick with the multiple sites for now. So once that's turned on, QuickBooks is going to have to close out all its windows here. So now that multiple locations is turned on, let's say I'm going to receive some items from our Amazon vendor, and we'll get some chain. Let's grab 100 feet of it. Well, you know what, we have units to measure, so we'll get 10 cases, we'll get 10,000 feet. And we will choose the site to be our San Francisco warehouse. Now, if I look here in our inventory center, chain, let me do a stock status by site. Right here we can see in the SF warehouse, we got the chain. Everything else right now is in the default location. I'd have to go in to inventory and transfer these items to whichever location I would want. So we would go from this drop ship location to SF if we wanted to transfer, say, it'd be nice if we could find one that actually has inventory. Anyway, you would transfer from the drop ship to the warehouse, put on the quantity you wanted to transfer, and transfer it over. So the best way to cope with different inventory locations is to get this advanced inventory module add-on. So Miles asks, how do I map a 2-for-1 price to come out of inventory as 2 items? That's a really good question, Miles. That's something that isn't easily done in QuickBooks. you're going to have to sell two items either way. You can't have someone just buy one item and add another one onto their transaction. You could do a discount for 50% off in QuickBooks, or that's something you could run in your shopping cart. You know what, Miles? I will contact you after the session so I can get the specifics of what shopping cart you're using and figure out how to best get that done for you. Okay. Long. When I create a special item on my website, like buy two, get one, what is the best way to match it with QuickBooks when a customer puts in an order? Again, I'm going to have to specifically see what that order looks like coming from your shopping cart, and when it gets imported into QuickBooks, and from there I can see specifically how your 2-for-1 deal is going to work. In QuickBooks, the only way to do discounts is percentage or price-based discounts. There's no 2-for-1 feature. From Rolando, how do you properly record returned merchandise? Sure, so the best way to record returned merchandise from a customer is with a credit memo. So go in here and create a credit memo. And I believe that I sold some chain to AJ. So we'll pick the chain, and let's say he wanted to return 10 feet of that chain that he had bought. And we'll return it to this SF warehouse site now that we have multiple sites turned on. Now when you save this credit memo, this is basically the reverse of an invoice. So now you have a couple options of what to do with this credit memo. You can send it as a credit to the customer, give them a refund, or you can apply it to the original invoice. We'll retain it as a credit for the customer. And then if we go to our item list, we can see, do a quick report here, and we can see that credit memo has been applied and the 10 feet of chain has been put back into inventory. From Christine, how are items managed in QuickBooks that have been discounted marked down? Where is the cost charged? So in QuickBooks, you can make items that are discount items. Right here at discount. Let's call this discount 10% off. And we'll make it a 10% discount. You want it to hit, let's see if we have a discount expense account. This is a test file I'm using right here, so I'm a little unfamiliar with the chart of accounts. You want to hit a discount account, but we'll put an advertising promotional discount. And then so when you create an invoice for a customer, for instance, so we sell good old AJ some more chain. We'll say he wants one. There you go. We'll say he wants 2 rolls of chain. Then right below it on the line, you enter in your discount. So we can say for being a great customer. And you can see it automatically calculated out that 10% discount for you. From Christine, how are items managed in QuickBooks that have been, oh wait, this one I just did. Next one from Rolando. Oh hey Rolando, I remember answering an earlier one from you. How should you properly account for SKUs or items that you regularly purchase for resale from a vendor that drop ships those items but that you never keep stock of? This should be an inventory item or non-inventory item. I would say for this one, you want to keep the item as an inventory item. You never keep stock of it, but what if you did? That's something you want to track the value of. Typically in QuickBooks, dropships are done as purchase orders, in fact, because it's an item that you're purchasing from your vendor and they're going to ship it directly to your customer. And in ECC, that happens the same way. You can have ECC create purchase orders for you for dropship items. So if you go here and create a purchase order, this chain item again, and let's say it comes from Amazon. So in the ship to here, to the drop ship to, you pick the customer that you want them to drop ship it to. So it's getting sent to Allegra. And this will let your vendor know on the purchase order to drop ship that directly to the customer. Once the customer receives that drop shipment, you then want to record an invoice or sales order. Okay, this is a huge question from Chris. Great name, by the way. If your inventory is all messed up, what do you recommend doing first to fix it? This is a huge question. I would really recommend that you get some consultation time with myself or another QuickBooks Pro advisor, preferably one that has a lot of inventory experience. There's different things, there's a couple different ways that your inventory can get messed up. When you are setting up items, you can see, let's grab that chain item again. When you're setting up items, you have these different accounts that the item hits. This chain, the cost of goods sold account, is going to cost of goods sold. Its income account is a sales account. Say, for instance, instead of doing that, you had your cost of goods sold actually going to a sales account. So then what's happening is the value is circling back in on itself. That's one way that things can get messed up. Another way that things can get messed up is what got mentioned earlier, is when you have negative inventory. Negative inventory is not possible in the real world, so always confuses QuickBooks. Another thing that can be happening is if you look at your full item list and you want to look at your inactivated items, show inactive items. So if you have any inactive items in your item list that also have quantity attached to them, that quantity doesn't show up on your inventory valuation report. That's one of the ways also that you can have inventory all messed up between your inventory valuation and your inventory asset account. So I guess three things that I would check quickly is make sure I don't have any negative inventory, make sure that all my inventory items are hitting the correct accounts, and make sure my inactivated items don't show any quantity, positive or negative. Now there's some tips and tricks I can show you on how to easily find those things, but like I said, that's something I kind of want to save for another webinar because that's its own whole huge topic. From Dwight, is it possible to show gross profit per invoice or per product line item? I struggle with this when I have to pay my sales rep a commission. Well, you know what? I know there's a way to do that. I'm going to have to, that's not a report I run frequently though. Dwight, I will definitely take this offline and show you how to do that after I've done a little bit of research. From Andy, can ECC do sales receipts on certain items and purchase orders on other items? Yes, ECC can do this. So if we go into ECC right in this edit transactions area, let's back up. So you go File, Configure Store, pick the transactions. And you can see here one of the options is different transaction type based on payment method. So what you could do is say, okay, if they're going to pay with cash, I'm going to want it to be a sales receipt. Add another option. Let's say if they pay with, we could do a debit card or just anything else really. We'll do that as an invoice. So this is how you can have different types of transactions based on your different payment method.
And also, I do want to chime in, Chris. You know, this question is about creating a purchase orders. Now, if you go to purchase orders are created based on a rule. So if you are utilizing different type of transaction methods and you have particular items that are only purchased in a particular way that will trigger an invoice, what you can do is, Chris, if you can go to the Enable Purchase Order screen, if there are particular items that utilize purchase orders, it's number 3 in the transaction screen, you can mark those particular items as dropship. And you can do that in the product screen. Actually, I'm going to show this and make myself the presenter so I can go ahead and show this process, since this is also about creating the purchase order. So just one second while I make myself the presenter. So let's take a look at what Chris was showing you at the beginning. So we go to File, we go to Configure Store. Within the transaction screens, you can have different type of transactions based on a particular order status or even a payment method. But really, if you're trying to create a purchase order, you can click on Purchase Order, and then you can set up the purchase order. Now, as you can see in number 2, purchase orders have rules about how they're generated. You can always do a purchase order for all orders. If you have specific items that you want to create the purchase order for, you can mark those as dropship. And if any of those items, while in the process of posting those to QuickBooks utilizing eCCDesktop, a purchase order will be generated for those particular items. And those items should definitely have a vendor attached to those so those purchase orders can be created. Now, where to mark those items as dropship, that's easily done. I'm going to go out of the configuration area and go into the product module. Now, the My Products area will allow you to mark particular products for dropship, and those can be done within the QuickBooks product screen here. So, for example, if I want, if this item pastry, if anybody purchases this particular item and I want a purchase order for that, I can mark this as dropship by using that truck icon. That truck icon triggers a purchase order to be created for this particular item. So this is how you can create different type of transactions based on payment method or even order status in the online store, and then utilize a purchase order to be created for that based on a rule. That's a really good question. And which brings me to my next point. You know, a lot of you are, you have great questions asking about how to do this and do that within QuickBooks. And this is really, what the Customer Success Squad does. And if you have implementation services, let's say you've purchased a QuickBooks Enterprise plan or a QuickBooks Point of Sale plan, and you have implementation services with your purchase. That implementation service, part of that is QuickBooks consultation. And if you purchased it before and you didn't realize you needed, you're in this webinar and you realize, like, oh my goodness, I need some QuickBooks advising. I have lots of questions that I need answered. You have that with your subscription. Now, if you are a Pro Premier plan user and you notice that you need QuickBooks advising, you can always purchase a training package and you can get that, and we can also train you on how to utilize everything you're doing, not only with QuickBooks but also with eCCDesktop. And if you have any questions about QuickBooks advising, if you need QuickBooks advising and you want to assess that, if you need to schedule that because you purchased it with your subscription, you can always send us an email at success@webgility.com and we can get that started for you. I also want to mention some educational resources that you have available. We have within our help desk, help.webgility.com. That holds all the product documentation and the community forum, as well as release notes and news and updates. And there's also an area within our community that it's just for Chris, and it's called Ask a QuickBooks Pro Advisor. Chris Robinson will be the main moderator of that area, and he will be addressing your questions there. I know there's already one question in there, and so feel free to, ask more. These resources are here for you, and this particular resource of Ask a QuickBooks Pro Advisor is free. So anytime you have a question about QuickBooks, go ahead and go into our community forum within help.webgility.com and ask a question to our QuickBooks Pro Advisor. Also, we have a WebGility blog that we have, and we create articles about e-commerce, about QuickBooks, about inventory. So definitely stay engaged with our blog to get any kind of the new information that we like to give to all of you. And I do want to plug our support team. If you guys are experiencing any kind of issues with your product, or even if you have a question, a support question, you can always call or email our support team. Our new hours are actually 5 a.m. to 6 p.m. Pacific time. So we've expanded our hours of operation just for you, so we can make sure we can assist as many of you as possible. And if you need to submit a ticket or a request, you can always email support@webgility.com. Now let's take a look at our webinar schedule for this month. So the first week of May, we talked about warehouse fulfillment in eCCDesktop. That is recorded and it's accessible within our help.webgility.com eCCDesktop knowledge base in the products webinars area. Last week we talked about item behavior in eCCDesktop, and this week, of course, we're talking about what's happening in QuickBooks. Next week, we're going to be talking to Novel Aspect. Novel Aspect is a company that hosts QuickBooks. So I did have a question about, I want to host QuickBooks. Does eCC work on that? Novel Aspect, we just launched our partnership with Novel Aspect, and yes, eCC works beautifully on Novel Aspect. I personally have used it, and it's absolutely amazing. So if you're interested in hosting QuickBooks and hosting eCC within that environment, and you want to know more about Novel Aspect, you can definitely attend the webinar next week, and I assure you, you'll be very pleased. And the final webinar we have in this month is Insuring Your Packages with WebGility Insurance. This is applicable to both eCCDesktop and ShipLark, because this is really focusing on shipping and shipping only and the utilization of WebGility Insurance. So this is going to be a really great webinar. Again, webinars are always Thursdays at 10 a.m. And also there's a survey that you'll get after the webinar. Please fill out the survey. Let me know how I did. Let Chris know how he did. And you can always join any webinars we have in the future and also view webinars we have already recorded. So now we're going to go to our second polling question. I know a lot of you have a lot of questions, and many of you may have already purchased a QuickBooks Pro Advising session and have not utilized that. So what are you interested in? Are you interested in scheduling your consultation if you haven't already done so? All right. So we're going to close the poll now. So thank you very much for answering our poll question we have. And for the ones, for any of the attendees that need to have their QuickBooks advising scheduled, and you have purchased you've purchased an enterprise or a point of sale plan, or you have Pro Premier or Cloud, and you've purchased a training package, definitely send us an email to the customer success team at success@webgility.com. Chris will also be addressing any questions that you have about the sessions, about scheduling, and we'll also be getting back to everyone we weren't able to address. There were some really, really good questions that he got. So for those of you that he said he's going to contact offline to give you more information, Chris will definitely do that. So if there are no more, are there any more questions? All right. So, if thank you so much for joining our webinar today. This is a really great opportunity for Chris. We're very, very glad to have him here at Webgility as our resident in-house QuickBooks Pro advisor. This is something that we decided, we really want to make sure that if you're having QuickBooks questions, you really want to understand how to utilize our software with QuickBooks. We are here for you. This resource is here for you. And we want to make sure that you know that we value your business and your time. And we're really, really glad to see a lot of engagement on this webinar. So thank you to all the attendees. Thank you, Chris, for this wonderful webinar. I know you were able to address a lot of questions that people have.
Thank you, Allegra. It was great being here, and this was my very first webinar, so I had a great time.
You're very welcome, Chris. And I will end this webinar as I do all webinars. Have a great